Real estate investing, pros and cons, what no one tells you. What if I told you real estate has made more millionaires than almost any other investment, but it has also silently destroyed people financially? And the worst part, most beginners don't even realize the mistake they're making until it's too late. In this video, I'll break down the real pros and cons of real estate investing, but more importantly, I'll reveal the hidden risk that nobody talks about, because real estate isn't as safe as you think. Section 1. What is real estate investing really? Before we talk about the pros and cons, you need to understand what you're actually doing, because if you think real estate is just buy a house and rent it out, you're already behind. You're dealing with assets, debt, tenants, maintenance, markets, and this is where things start to get complicated. Section 2. Pros of real estate investing. 1. Cash flow, monthly income. Imagine getting paid every month without working for it. That's the power of rental income. But here's the catch. Not every property produces positive cash flow. 2. Appreciation, property value growth. Over time, real estate tends to increase in value. That's how wealth is built quietly. But not every market grows the same. 3. Leverage, using borrowed money. What if you could control a large asset with a small amount of your own money? That's leverage. Banks finance the deal. You benefit from the growth. But leverage cuts both ways. 4. Tax advantages. Real estate investors often pay less in taxes, deductions, depreciation, write-offs, but only if you understand how to use them. 5. Tangible asset, real physical investment. You can see it, touch it, control it. Unlike stocks, this is a real asset, but physical assets come with real problems. Section 3. Cons of real estate. Now let's talk about what most people ignore. 1. High entry cost. Real estate is not cheap. Down payments, closing costs, repairs. It adds up fast. 2. Illiquidity. You can't sell a property instantly, unlike stocks. This takes time, and time can cost you money. 3. Maintenance and unexpected costs. Things break always, and you pay for it. Repairs, emergencies, ongoing costs. 4. Bad tenants. Not all tenants are good. Some don't pay, some damage your property, and dealing with them is not easy. Section 4. The truth no one tells you. Remember the hidden risk? Here it is. Real estate is not passive unless you build it that way. Most people think it's easy money, but it's a business. And if you treat it like a hobby, you'll lose money. Section 5. Active versus passive real estate. Are you building income or buying problems? Because real estate can be active, managing everything; passive, outsourcing management. The difference: time, stress, and profit. Section 6. The biggest lie about real estate. Real estate is safe. That's what people say, but the truth: bad deals are dangerous. Section 7. Why most people fail. Most beginners lose money on their first deal, not because real estate doesn't work, but because they don't understand it. Section 8. The psychology: fear stops people from investing, and greed makes them invest badly. Section 9. Risk management. Smart investors don't eliminate risk. They control it: location, numbers, margin of safety. Section 10. Location, critical factor. In real estate, location is everything. A bad property in a good location beats a good property in a bad one. Section 11. Patience. Real estate rewards patience, but most people want fast results. Section 12. Long-term wealth. This is not quick money. This is slow, powerful wealth building. Section 13. Market crashes. Real estate markets can crash too, and when they do, leverage makes it worse. Section 14. Your strategy. There is no perfect strategy, only the one that fits you. Section 15. The danger of overpaying. What if the deal looks good, but you're already losing money? Because in real estate, you make money when you buy, not when you sell. Overpay once, and you'll feel it for years. Section 16. Emotional buying. This is not your dream home. It's an investment, but most beginners fall in love with the property. And emotions are expensive. Section 17. Market timing. Everyone wants to buy at the perfect time, but almost no one does. Trying to time the market can cost you opportunities. Section 18. Interest rates, the silent factor. One small change in interest rates can change everything. Your monthly payment, your profit, your risk, and you don't control it. Section 19. Hidden costs. What if your profitable deal isn't actually profitable because of hidden costs? Taxes, insurance, repairs, vacancies. The numbers lie if you don't calculate correctly. Section 20. Bad properties. Not every property is a good investment. Some are financial traps, bad location, poor condition, no demand. A bad property can drain you for years. Section 21. Management stress. Tenants call at the worst times. Leaks, repairs, problems. Real estate is not always passive. It can feel like a full-time job. Section 22. Analysis versus action. Some people never invest because they overthink everything. They analyze deals endlessly, but never act. Clarity matters, but action creates results. Section 23. Cash flow versus appreciation. Do you want income or long-term growth? Because most properties give you one, not both. Cash flow, just monthly income. Appreciation, just future value. Smart investors know which game they're playing. Section 24. Fix and flip risks. Buying cheap and fixing and selling fast sounds easy until costs go up and time runs out. One mistake and profits disappear. Section 25. Rental vs Airbnb. Long-term rent or short-term profit. Each has advantages and risks. Airbnb carries higher income potential. Rentals shares stability, but regulations can change everything. Section 26. Legal risks. What if one legal issue costs you everything? Contracts, evictions, local laws. Real estate is not just investing, it's legal responsibility. Section 27. Economic factors. Inflation, recession, employment all affect real estate, and none are under your control. Section 28. Consistency versus big deals. You don't need one big deal. You need consistent good deals, small wins. Over time, build real wealth. Section 29. Thinking like a business owner. Stop thinking like a buyer. Start thinking like a business owner. Real estate is not just property, it's a system. Now you know the pros and the cons. But here's what really matters. Most people fail in real estate, not because it doesn't work, but because they don't treat it seriously. Section 30. How much money you actually need. Let's be real. How much money do you actually need to start? Because you can start with little money is only partially true. Down payment, 10–30%. Closing costs, 2 to 5%. Emergency fund. You don't just need money to buy, you need money to survive mistakes. Section 31. How to analyze a deal. Basic formula. Before you buy anything, you need to know the numbers. Here's the simplest formula. Income, expenses, cash flow. Expenses include mortgage, taxes, insurance, maintenance, vacancies. If the numbers don't work, it's not a deal. Section 32. The biggest beginner mistake. The biggest mistake, buying based on price, not value. Cheap doesn't mean good. A low price in a bad area can cost you more long-term. Bad deals look cheap at the beginning. Section 33. How banks see you. You're not the only one analyzing the deal. The bank is analyzing you. Credit score, income, debt. They decide if you qualify. Your financial profile determines your opportunities. Section 34. What happens after you buy? Most people think the hard part is buying, but the real work starts after. Managing tenants. Handling repairs. Tracking expenses. Buying is easy. Managing is where you win or lose. Section 35. What if your property stays empty? What if no one rents your property? This is called vacancy, and it destroys profits. You still pay the mortgage with zero income. One empty month can erase months of profit. Section 36. How to avoid bad tenants. One bad tenant can cost you thousands. So how do you avoid it? Background checks. Income verification. References. Good tenants are not luck, they're selected. Section 37. When to walk away from a deal. Not every opportunity is worth taking. Here's when you should walk away. Numbers don't work. Location is weak. Too many unknowns. The best investors don't chase deals. They reject bad ones. Section 38. The risk of over-leverage. Using debt can make you rich or bankrupt you. Too much leverage. High risk. If the market drops or rent stops, you're exposed. Leverage magnifies everything, including mistakes. Section 39. How long it really takes to see results. Let's be honest, this is not fast money. Most people expect results in months, but real results take years. Equity builds slowly. Cash flow grows over time. The people who win are the ones who stay. If you want to learn how to invest in real estate the right way, without costly mistakes, subscribe now, because in the next video, I'll show you exactly how beginners can start investing in real estate step by step. And trust me, that's where everything changes.